Welcome back to Taxes Made Simple. I'm your host, Karlton Dennis, and in today's video, we are going to go over how to pay yourself as an LLC in 2022. Most new business owners want to figure out how to take home the most amount of money possible while also limiting their tax liability and minimizing any tax obligation that they might have. However, a lot of people start businesses without knowing the best way to pay themselves. Guys, if you've recently created an LLC or if you're thinking about creating one, I want you to know that it is very important on how you pay yourself. If you want to know how to pay yourself, look no further than this video. This video is for you. So let's dive in. Now, before we get into the best way to pay yourself as an LLC, let's do a quick refresher of exactly what an LLC is. An LLC stands for a limited liability company. An LLC owner or owners of the business cannot be sued or held liable personally for the debts or liabilities of the company. LLCs are designed to protect business owners from losing all of their personal assets in the event that something goes wrong with the company. For example, if the company is sued or if it is forced to repay a large outstanding debt, the liability protection that the LLC provides helps to make things safe enough for many people to feel comfortable starting a business. Without limited liability protection, a lot of people would be too afraid to start a business because they would be too afraid of being held personally responsible for all of the business's debts and liabilities. There are single member LLCs, which are owned by one person, and there are multi-member LLCs, which are owned by multiple people. The option that is right for you depends on whether or not you have partners. If you don't have partners, then most likely you're gonna start off setting up a single member LLC, and it's probably the better option for you. And if you do have partners, the multi-member LLC is most likely the better option. The best way to pay yourself as an LLC though, the best way for single members to pay themselves as an LLC is what's called an owner's draw. So let's talk about it. Hey guys, I'd like to take a moment to let you guys know who I use to set up my LLCs and the only company I refer people to use to set up LLCs. This company is called Better Legal. Better Legal is the fastest and most affordable way for business owners to set up their new LLC or corporation. Better Legal files in every single state and you can have your business completely set up in as little as 2 business days. Going through the process has been as easy as drinking water because you can have an LLC set up in less than 10 minutes and actually understand what you're setting up on their platform. They'll help you obtain your articles of incorporation if you decide to set up a C-Corp or an S-Corp. They'll help you obtain your articles of formation if you decide to set up an LLC. And most importantly, they'll help you get your EIN number so you can take it to your bank and start getting yourself paid. If you need to get your LLC set up at an affordable price, look no further than Better Legal. Their link is below so you can get started. Now back to this video. Owner's draws. Also commonly referred to as owner's distributions. You might have heard me say that before. An owner's draw is an amount of money that you take from the business and give to yourself. In order to set up your owner's draw from your LLC, the first thing that you have to do is set up your business bank account, business owner. You'll need your EIN number, the employer identification number, in order to set up your business bank account. The government will give you your EIN when you set up your LLC. You can think of this number almost as a social security number for your business. When you go to set up your business bank account, the bank will require you to provide this number. After you give them your EIN, you will be able to set up the business bank account associated with that number. Now, once it's set up, you will be able to start using the business bank account to store money earned by the business. When you are ready to pay yourself with your owner's draw, you can simply send the money from your business bank account to your checking account. Owner's draws are used for LLC owners in lieu of a salary. As long as you keep your business an LLC and do not change it to an S-Corp or C-Corp, you will be able to use the owner's draw to pay yourself distributions from your business. Now, when you are taking your owner's draw, you do not have to pay yourself in even intervals. You can pay yourself whatever you want and however often you want and whenever you want. However, you should be careful not to pay yourself too much because you want to keep enough cash in the business bank account to pay your taxes and to be able to cover expenses. So, for example, if your company made $200,000 in 1 year, but if you had $80,000 in expenses, you should not pay yourself more than $120,000, right? Over the course of the year, because otherwise you might struggle to pay for those expenses. It would be smarter to to pay yourself probably around maybe $100,000 and leave a little cushion because you do not know what surprise expenses might pop up in addition to your usual expenses. LLC payments and taxes. The nice thing about LLCs is that they are designed to combine the best benefits of corporations and sole proprietors into one. So even though LLCs have limited liability, just like corporations, this means that for tax purposes, the owner and the business are one and the same. So just like with the sole proprietor, your LLC profits are considered personal income, meaning you don't get taxed twice on that income. However, even though you don't get taxed twice as a single member LLC owner, you will be subject to self-employment tax, which is 15.3%. Welcome to my YouTube channel. 12.4% goes to Social Security, 2.9% goes to Medicare. Many people consider this tax to be quite large. It is burdensome and it's crazy, and I talk about how to avoid it every day on this channel. If you want to avoid self-employment tax, you can switch your LLC to an S-Corp. However, if you do this, you'll be required to pay yourself a reasonable salary. You can still take distributions on top of your reasonable salary, but we recommend, at least in my office, that your salary is at least 30% of your annual business income. Many people who start out as single member LLCs eventually switch over into S corporations to avoid paying self-employment tax. That is just what ends up happening as you grow. If you switch to an S corp, then you only pay 15.3% on what you paid yourself, the payroll. And you also still qualify for the 20% qualified business income deduction, the QBI, which allows small business owners this additional 20% on all net business income. Changes for 2022 to be aware of, generally speaking, is that the tax rules for LLCs will remain the same in 2022. However, there are a few general tax changes that you should be aware of. For example, the standard deduction will rise. The standard deduction will rise for married couples from $25,100 to $25,900. And then for individuals, it will rise from $12,550 to $12,950. For head of household, it'll rise from $18,800 to $19,400. The standard deduction is the deduction that you are allowed to take against your taxable income every year on your tax returns if you qualify. No questions asked. In lieu of itemizing your deductions, you're able to take the standard deduction. Another important change for 2022 that you should be aware of is that the QBI deduction, which we were just talking about above, will have a taxable income limit of $170,050 for single filers and $340,100 for joint filers. This means that if you want to claim this deduction, then your income must not exceed these thresholds. These taxable income limit numbers are up from last year. Last year was $164,900 for single filers and $329,800 for joint filers. So a quick summary, just to recap, limited liability corporations restrict your liability and prevent you from losing all of your assets if your company is sued or has a major debt called in. This liability protection gives many entrepreneurs the confidence and security they need in order to feel comfortable growing and starting a successful business. If you decide to start your own LLC, you will be able to pay yourself by taking an owner's draw, by taking a distribution, which is where you essentially just pull money out of your business bank account and transfer it to yourself. As you grow, you will eventually learn to switch over into an S corporation where you can take payroll. You'll use your EIN number as a taxpayer to go to your business bank account to open up your bank to allow for yourself to get paid as an LLC owner. If you keep your business as an LLC, you'll be required to pay self-employment tax, but you'll only be taxed once because your LLC's profits are considered personal income for tax purposes. If you want to avoid paying the high self-employment tax, you can switch to an S corporation, but I am warning you to know when it makes sense to switch to an S corp. Please visit my video on when to switch from an LLC to an S corp, okay? Conclusion, if you have an LLC, then it is very important that you pay yourself correctly, because a failure to do so can be a red flag to the IRS and can result in a negative consequence. If you have any questions in regards to how to pay yourself, how to set up an LLC, where to go to transition your LLC to an S corporation, my team and my firm are here to help you. Please click on the links below, and I look forward to assisting you. I'll see you in the next video. Cheers.